Okay, so basically, let's just do a little recap on what we traded today with the candles going over from last night. Um, access that. Oh, you know what? Wait a second. Hold on. I have to share my screen. That would be good. Okay, so now you can see everything. Um, so again, recap. Let's do this really quickly from what we learned or what we even talked about last night. I believe everything was on a 10 or 15-minute time frame. And so far we have two right here. So this was the trade that we took today. Sorry. And this was a 10-minute hanging man. Sorry, 10-minute spinning top. And you can see it right here. This one's a bear spinning top. Oops, sorry about that. And that worked out perfectly, as you can see from here. So again, initially you have a large move up, then it came back down. So 10-minute spinning top brought it back down. Also, on the same thing, this is the same time, except on a 30-minute chart, you have a shooting star. Now let's go back to see what a shooting star is. And it's just right here. Upper wick, red candle, and just like that, shooting star. And you can see we fell down, filled it all the way down here, and then we bounced. That was our trade that went over 150, 200%. Sadly, I got stopped a little bit and, still made great money on it. And that was a great learning trade, especially after our session last night. Now, here we have another one. Inverted hammer on a 10-minute here after a downtrend. And then we broke up, confirmed. This one only went, one candle more, so it wasn't really that great. That's why I like to see these large moves like this. See the large move, you're going to get some good points back on the way down. And you could even probably play this, maybe a bullish harami here, but I don't want to say it, and we didn't play it. But again, you want to play those big moves, and we got that. Now you could say the same thing here. Again, smaller move, so don't play it, or didn't play it at least. You got a hanging man here. So this is a bearish one, and this came down. Again, hanging man is right here. Lower wick, red candle, and beautiful. So those are some easy plays, that we saw today. Let me go into, I love that Airbnb trade that I know some of you took that I was talking about. Sadly, I did not take it. Let's see here. Might have been on smaller time frames. I think it was on the 1. So I'm gonna have to scroll back here. Hold up. Looks like it is on the 1. So here, 1. You have a evening doji star, possibly even an evening star in general. As you can see, it kind of gaps up a little bit over it, and it kind of gapped up a little bit over it. So you have an evening star there, and that took us all the way down under this confirmation here from 89.70, let's just say, give it a couple cents more, all the way down to 87.15. So and this is a 1-minute candle, so 9:38 to, let's say, 9:50. Let's say in 12 minutes there, you could have had a $2+ move on the contracts. I believe went like 50% plus, possibly even more. And just right there, you would have had a nice trade today. I know a couple did take that, so happy to see. And you really could have did the same thing, later in the day. You could see some weakness up here. You could see it kind of chopping around. See on some smaller time frames or even bigger ones. Hold on. About the 30. On the 30, you kind of have a shooting star here, and it just dropped the rest of the day. Same thing. 15-minute, no, 10-minute. I guess you could say a spinning top. I wouldn't really want to consider it. I mean, you could. But again, just showing you things that we were looking at today and perfect examples from last night's session. So, learning these candles again could be key. And lastly, we'll go over XOM really quickly. I talked about might have been on a 5. Oh, there we go. Hanging man again. I talked about this intraday. And I said we could come down a little bit. It did indeed do that. And again, show you what a hanging man is. Bottom wick with the top candle. And same thing here. It could have a little wick above. It doesn't, it doesn't matter. And you can see we broke down after that and then just chopped the rest of the day. And again, still love this name. We still have it for a swing. And we have it for the inverted hammer, reversal to the upside, trying to fill this candle right here, the top wick right here at 108.50, almost to the dot there. And to show you what an inverted hammer is again, right here. After a downtrend, you rip up. That's exactly what we're looking for here. Want to see move over that 108.50. That's where our first target really is. And then if we break over that, we go into 109.20, 110.80, and then 111 plus. So now let's go into what we had, kind of planned for us now. That was our little recap, before the session here. So let's go into it here. So I want to talk about consistently sizing, and let's just dive into that consistent sizing and kind of a little bit of the mental game. This isn't going to be a big session tonight. We had a pretty large session last night, so again, don't want to bore you guys. Listen, I don't want to listen to 30-minute videos, hour longer videos either. So we had our 5-minute recap. Probably going to do a 5-10 minutes here of that consistent sizing, and that's probably going to be it for today. So consistent sizing, this is going to be key depending on it. Best way I want to put it is it's really depending on you. No one knows what size you're going to be able to handle and be handled to lose and be able to manage other than you. I could say whatever I want to say. I could say what works for me, and what could possibly work for others, and it does not work for you. So truly, as much as I'm going to go on for the next 5 to 10 minutes, this 100% depends on you. And I say that to be real with you. I'm not saying that to be a dick, or I'm not saying that to be anything else. But truly, it depends on you. For, let's say you have $5,000 in your account, and one person may be able to risk 500 and not care. Another person may only be able to risk 200 and care about that. So again, someone's risking 10% compared to someone who's risking 4 to 5%. And it all comes into who you are as a person, and that mental mindset that you have going into trading or going into money in general. Now, depending on your sizing, and I'll add a little bit of contracts into this too. So no matter what, for me, when I'm trading and I'm looking at, I'm always looking at the charts. I'm always looking at the candles. And then once I start to see, what we're doing and everything, I look at the contract. So for example, SPY, what did we have today? I will check it right now. Give me just a moment here. So SPY, we had 380 puts. I know we were just about probably 381 when this happened. Where were we? Let's go to that 10. Okay, here we are. All right, so we were 381.50 under the confirmation where we actually entered right here, actually perfectly. We were 381.30. So I got 380 puts, $1 out of the money. Now you got to consider that we came up from 378 all the way up to 382. So that's a $4 move. I'm expecting at least $1 to $2 of that to come off from this top candle here. So 380 was reasonably priced at, what was it? Let's see. 380 was reasonably priced at 67 cents was my entry I'm looking at right now. And these contracts went all the way up to about 170, 180. So you had a 200% move right there. And, I'm trying to look, and what I've told many is they'll look for contracts. Let's say in this example, we're at 381.30 where we entered. I'm looking at 381 or 380 puts. And sadly, some people are looking at 375 and 376 puts. Not that those wouldn't pay in this situation, but you're playing really far out of the money. We didn't even open there. We opened $3 above that. You're playing really far out of the money just because it's cheaper, and just because it's cheaper doesn't mean it's better. Just because you could buy 20 more contracts for the same amount doesn't mean that's a better trade for you. It doesn't mean it, that's a better opportunity. That only means there's more premium burn, data burn, so on. And, the possibility of those contracts going to zero. And they'll burn quicker than my 380 puts. So we may chop here and then all of a sudden, after 10 minutes of chopping, your 20-cent contracts are 10 cents, while my 67-cent contracts are only 60 cents. So I lost 7 cents and you lost 10 cents. You're already down 50%. I'm down like 11 or 12%. That's a big difference. You have now, let's just say, triple the amount of contracts I had, but you're in terms still losing more. And, that's just not a good way of thinking. That's what many, thought when they first come to this game. You're going to get rich. You could get rich if you play smart, consistently size, and be smart about the contracts and stuff that you're, using. And again, I'm a day trader, so I'm doing same day for SPY, and for, other things I'm doing same week. For example, Boeing, Airbnb, so on and so forth. So I'm looking near money. I'm looking to be smart. I'm looking to, lessen my theta, and make sure I'm putting myself in the best situation I possibly can. Again, consistent sizing. As you guys can see, I have a $2,000 account, and I am putting maybe 300 to 400 in each contract, in each trade. Sometimes less, usually never really more. And, I'm willing to risk that, but I know putting in that 300 to 400 out of 2,000. So let's say 15 to 20% a trade out of the $2,000, that I'm not going to have myself lose that full 300 or 400. I'm not even going to have myself lose 200 or 150. I'm maxing it at 100 to 110, somewhere around there. And it also depends on the trade. For me, I'm looking at the chart. I'm looking at the strength. If it starts to get weak, I'm out. I set my targets. I know where I need to exit. I know where I need to take profit. And then I set my stop on the remaining and ride it for the rest. And that's basically, kind of where I'm going there. And that brings up a good point. So with that SPY trade today, we had, good profit. We went up, I think, like 35, 40% in just minutes there. I trimmed at 1, and then once I did that trim, I set my stop at 0.80, 13 cents or 14 cents into the money, not into the money, in profit for my entry. And sadly, they actually just, stopped us out right then and there, and then absolutely ripped it after that, or dipped it hard after that, I should say. And our contracts really, went up to that 200% move. But, I played smart. I took my trim, let the runners run with a stop and profit. And, sadly, they just took me out. It is what it is. You just move on to the next trade. And that's another thing. People think just because you did one trade and you're out, you always have to be in another trade. And that is not the case. That is, really the worst thing you could do. It's just continuously go into trades because you think you have to. Trading is 99.99%, mindset, in my opinion. If you don't have the mindset, if you really are just thinking about solely making money, and that's the goal, but preservation is 100% key in trading. If you can't preserve that capital, you're not going to be able to even to get in a trade, the next time you're going to look for one. You need to be smart. You need to focus on preserving that capital, and consistently sizing is key. You may win one trade and you're like, oh, let me size up, and totally lose that trade. And now you're down even more than that win. Consistently size. If you're doing 300 a trade, do 300 a trade. Now, once you make 2,500 or 2,000, then you go up to 400 or 450, stuff like that. You don't have to stay at that price forever. But once you consistently make that profit, once you consistently grow and your account goes up 2,500, 5,000, then you could start to raise it a little bit and consistently size at that rate going forward. So you're always, in that same realm. And, people think that your 200 can't turn into 2,000, and it can. It grows. You just gotta, put the work in, be smart, consistently size, preserve that capital, and grow as a trader. Every day is a new opportunity. Listen, I'm learning every day too. Doesn't matter how long I've been doing it. I'm only in it 7 to 8 years now. Doesn't matter how long I've been doing it. I learn every single day, and we're all learning. That's why I said, as a community, as a group, I want us to grow together. I want us to learn together. I want us to trade together, and become one. And that's where I'm kind of at for that. Do you guys have any questions? If you do, you could type them in the chat. Okay. If there's no questions, oh wait, hold on. Yeah, but as you guys saw today, whoever watched that video last night and whoever just even looked over the candlestick chart, you saw so many opportunities today that you could have played out. Learn those candles, put the time in, and they really are helpful. Seriously, they changed my trading. By the way, I hope this XOM absolutely rips tomorrow. It looks really good. It really does. I know at the end of the day it had that reversal here too, but or I could see, you could possibly see a head and shoulders here, which I don't like. Again, that's only intraday. We'll see how it plays out tomorrow. I know the oil news came out really bad, which is actually good in terms of oil going up, actually, because there's less supply. So that's good. And again, you can see oil here, kind of the same thing. It looks like it wants to come up. We just need to get above this top wick here. This is actually oil. So, um, um, yeah, I appreciate those comments. And so when the move is very definitive, is it better to play SPX versus SPY in and out in a minute or two? It really depends on you. Again, that's also kind of like a mindset thing in a way. And the only reason I say that is because SPX moves so much quicker, and you could literally have contracts move from 2 to 10 in minutes. If the move is drastic, like today, when we entered that trade, or those contracts could literally go from 2 to 0 in minutes. Whereas SPY, it won't get that massive killer move if it doesn't go our way. And you won't get absolutely obliterated on the trade. So it really depends on kind of that mindset for you. If you're willing to withstand that. And don't get me wrong, I love SPX and I actually do plan to play it, but I don't plan to play it right now where we're at in this stage of the challenge at 2000. Can you give your outlook on what you're looking for tomorrow stocks you're looking for? So, really, as crazy as this sounds, and I've said it many times, I really don't like to go over the night before that much anymore. I found that my biggest success is literally just not having a bias and just going into the morning. So at around 8:30 and 9 o'clock when I text all you guys, um, you know, 30 to an hour before the market opens, I'm looking at what's moving. So for example, I showed you guys this last night too. This is how I found Airbnb. It was the highest mover in the morning. TTD was the highest mover in the morning. And you can see some of these names are still up here. Spot was another one. Um, I'm looking at what's moving. I track those names as you guys see every morning too. I type random tickers. I go Baba. I think this morning I did Baba, Airbnb, Spot, TTD. So stuff like that. That's where I'm looking at for strength. Things that are moving, with volume, things that are moving with volatility. I want to play those. And then for SPY, SPY, it also kind of depends. I kind of want to see where the gap down or gap up, really plays out. Let me take these off. I want to see what's going on here. Um, and really we have a spinning top here at the bottom, or like a doji reversal, maybe, possibly. I'm not going to say it is. Kind of want to see where we go tomorrow, but this usually calls for a mini bounce. We could possibly see that 38.73 above at the top of this candle here. If we break above this line, 38.78, we could fill the top wick here at 38.96, and even possibly up here at 39.17, 39.21. I really think we could possibly go up tomorrow. I think they could continue this a little bit, especially after this candle today. That's what I'm thinking right now. It could, could it not happen? Yeah, possibly. And again, I am actually a little bit bearish right now. After this bounce does, indeed continue or whatever, I am going to look to short. So the higher we go, the better it is, in my opinion. So is it a good strat to go bull when the 9 EMA shoots above volume? Average price on 105. I would really prefer like a 5-minute. I do look at the 1, David, by the way, as you guys have seen before too. But confirmation wise, I love to see closes over or under on the 5-minute. So yes, you could do that. I look for that on really like a 5, 10, 15. But again, I am looking at those 1 and 3s, and we could see potential gems on those 1 and 3s that I want to see continue on a 5 and 10 and confirm that. So that's kind of the answer to that one. Frankly, you should do a video on your trading journey. Show off isn't bad. I actually don't have a Rolex. I really don't like jewelry or anything. I'm not even like really like no, I definitely recall you of it. Listen, you've been with me for a long time. We've always talked and everything. I'm not like a showboaty person anyway, and I really don't even have anything to showboat. Only thing I really have is a Tesla that I bought after 4 years of telling myself, it's finally probably time to buy it and stop waiting. And Tesla sub 90, honestly, medium term, I really do think Tesla gets 75 to 80. At those prices, I'm 100% buying. I really think Tesla's going to get under 100. Not saying it happens now, because it's been absolutely decimated. While we're at it, yeah, it's been absolutely decimated. It's due for, a bounce sometime too, but I could see it getting here at 90. I could see it, getting here at 80, possibly even if we really wanted to go down 60s. Again, I'm a buyer anywhere under 90. I'm definitely a buyer under 90. I'm a long-term Tesla bull. And just because it's been growing exponentially over the past 1 or 2 years doesn't mean it's gonna stop. It's not even just about the cars, and they have more things coming. With the semis and everything, and the trucks and the Roadster, and obviously more sales going forward with the 3YX, possibly even in the S, and possibly even more cars. You never know. But it's not even about that. It's about the technology aspect of it. Kind of think of it as an Apple. Apple started out with one thing, then they outbranched. You got everything else with it. Tesla's doing that. They're also, robotics and so on and so forth. I really like Tesla. I've liked them for years. I'm actually really sad I never grew a really large position in it. But I'll be buying under 90. That's for sure. FedEx, I didn't watch. I saw it. I saw Nike ripped on the earnings, by the way. Yeah, sorry, the solar too. I don't even know how I forgot about that. Solar about Tesla. But yeah, let's see. I mean, I guess that's basically it. Yeah, I'll have this video posted in the next 5 minutes, the recording. Ooh, Tesla at 160. I know. Yeah, you're probably hearing it right now, but listen, it'll take time. I really wouldn't be buying. And again, don't listen to me, but I really think we're getting under 90, getting to 75 to 80. I'm buying when we get under 90. That's when I'm going to start buying. Doesn't mean, sell your position now. It depends on, what you think and stuff, but I'm actually not adding PLTR right now. That is actually my only long-term stock I have as of right now. because I didn't really build a long-term position because we were in that really big bull market and everything was already exploding anyway. That's when I really started to look into the long game, like a little too late. If I started 7 or 8 years ago when I really started into the long game, obviously I wish I was more long term then. Um, but yeah, I just have dividend stocks and PLCR long term right now, and I'm not really adding other than the dividend, the DRIP, the dividend reinvestment program. Neo, I haven't really looked at them in a while. ACMR, I honestly don't even know what that is. Neo chart wise, just absolutely getting decimated by like Tesla kinda. It's I don't know what this is really, but this one's been beaten too. Is this a reverse split, or was this just a gap up? But either way, this one is coming down. It looks like it has support here at 820, 825. Could bounce here, but it's not something I would trade specifically. I'll take like one last question. If not, we'll end it here in the next minute. But yeah, please consistent sizing, take those profits, trim, set stops, and let the runners run. If you get stopped, you get stopped. At least you're getting stopped in profit, and you walk away you walk away out of the trade a happy person. Can't think about what could have happened. Yeah, you do think about it, but there's always another trade, and it's just something to learn from. As of right now, it looks like a little Santa rally. I don't know what's gonna happen by Thursday or Friday. Um, but I really think we're gonna come down in January. And I also think next year, you know, we're really gonna come down in the market. By the way, we're about to hit new highs of today. Um, or I should really say yesterday's trading in futures, but it's really today's, trading because we're still in Tuesday. Um, but seriously, I think we could reach COVID lows, 2200, later next year. We are not out of whatever anyone thinks we're out of. Um, Interest rates are still going to increase. They already increased the expected, Fed fund rate. Um, Housing market's going to really break down a little bit more into next year. You know, I definitely see us making new lows recently around that 3,500 and going under that to 3,200, 3,300. I could see us hitting 2,800 to 3,000. And then if we really start to break down, I really see us breaking down here. Long term, I really think we could possibly hit 1,800 to 2,200, and I'd be a buyer there. Anything under really 2,700, I think I'd really be a buyer because we're down over 50% from the top. No, we're not actually. Yeah, we're definitely not. Oh, yeah, we are. No, we're not. 2,400 is 50% for the top. But people are really downplaying everything. And if you think about, 2008, if you think about the tech crash and everything, and what was it, 01 or 99, whatever it was, 2000, um, you know, things literally went, things like I'm not gonna say Apple, for example, but I'm just saying big companies like Apple literally went from $100 to $20. That's a pretty crazy move. So, anything could happen. Just be cautious, be ready. That's also why I'm not really going long term yet. We may be down down 1,000 points from the top, but I really do think we have a lot more in the tank for downside. That's basically where I'll kind of leave us there. See signs, yeah. They're still gonna get hurt too, JE. Yeah, David. You can watch the GNOD's challenge channel. We always talk, and like I said, I want to see a lot more of you talk in the VIP chat. That's where you're gonna get seriously. That's where you're gonna get a lot of the learning. You could come to these learning sessions and listen. They're they may be great for you. But seriously, if you're talking every day, if you're watching every day, conversing with us, seeing the charts that we're putting out and everything, and asking questions, that's where you're really gonna get that knowledge. actively doing it while it's actively happening. And yeah, that chart is true. I meant, so, could be interesting. Could we follow that same exact thing? Yes, we possibly could. But yeah, let's see what tomorrow brings. Markets are just about new highs from today. We're literally right there. Oil's kind of just chopping, going up. Again, that oil news was crappy, and in terms crappy being good for oil stocks because the reserves are down, or the supply was down, I should say, way less than it was supposed to be. And when supply is down, that means oil prices go up. Doesn't mean much here, but XOM is apparently up at 107.12 on low volume. So again, doesn't mean much. It did gap up today too. We'll see if it gaps up tomorrow.